Good afternoon, traders. It is Thursday, November 17th, 2016, and the U.S. stock market is closed. Hey, we had a really crappy day again today. You know, we had that great day, I think 3 days ago, 4 days ago, making over $50,000, but uh, we just have had a string here of very bad performing days, and it's like they're getting worse. Today we closed out negative $2,000. That's not too bad, but we got into 12 new positions, 5 positive, 7 negative, and we're holding negative almost $11,000 going into tomorrow, and that is bad. That is just bad. You can see here what's been happening. I called the Dow down for today. It went up. It actually gained 35 points. But what's happening here, we have 5 straight days here of kind of this consolidation sideways action, and that's okay up to a certain point, but it's got to break out of this one way or another, and it's not. It's just tightening up, and when we have this very tight action like we had today, and yet we end up getting in a pile of positions and nothing works for us, that's not good. I haven't seen, we are actually closed here less than 100 points from 19,000. We're just hanging below all-time record highs, and but we're hanging on the ceiling. And if you've been watching my videos for a long time, you know that this is not good action. We need to either back off the ceiling or break through it. It's not good to go crawling along here right under the ceiling, and that's what we got right now. And it's causing us a lot of problems. I know I'm just going on and on here and complaining, and I shouldn't really complain after we had this great rally here following the elections that took us to new record highs. But this kind of action is really frustrating because if we could just stand back and let it do this and not get in, only get into 2 or 3 stocks every day, that would be fine. That wouldn't bother me. But we're getting into a lot of stuff, and it's a lot of stuff that isn't going anyplace. So a lot of false breakouts, and that's hard. That it erodes our equity when that happens. I don't have anything good, absolutely nothing good to show you today. I'll show you some of the bad to just show you my frustration. By the way, how am I calling this? I don't know. I'm calling it that it's going to break out of this congestion, but I'm. Let's just say I'll call it up. But man, we need this to go up. We need to break out of this. This really bad, and the old standard theory is when it breaks out, it's going to break out one way or another about the length of what we have here. So it's either going to go down here or it's going to go way up here above the chart, and that would be substantially above 19,000. But at this point, it's just there's not volatility in the stocks. The volume has been trailing off as we go into this, so we just gotta wait and see. Okay, I'll show you the bad stuff. I have no good stuff. I'll show you the bad stuff. This is JGST, which is inverse gold, and this took off today, and we bought this pretty high, But then it did keep going and looked pretty good. We were actually up a couple $1,000 here, and then it turns around and backs off, and we're down about $1,000 negative. So that's a little discouraging. You think, okay, we're doing bad with inverse gold. Maybe we'll do good with gold. And here we go to Sibanye Gold, which is, I think that's a South African mining company. And that gapped up this morning. We buy the gap and got a little beyond where we bought it, and then it just reversed all day long. Came back a little at the end, but we're still down over $2,000 in there. So it's like we're getting whacked no matter what side of the market we're on, and that is, a typical predicament of a congested market. Anyway, sorry for ranting and raving, but this is very frustrating, very boring, and I don't like it. Okay. Trader Bob sign off. See you tomorrow on Friday. Let's hope for a better day.